Hey folks, the banking season is here with us. We are unpacking FY 2023 numbers with all the executives, and we are privileged to have the man in charge of Absa Bank. That's Abdi Mohamed. Thank you so much for your time.
Thank you, Julian. Thank you for having me.
Abdi, first of all, congratulations on the numbers. It is the first full year set of earnings under the new strategy. We came from growth and transformation. We're now talking about accelerating momentum. When you look at the F23 numbers, do you feel the liftoff speaks to accelerating momentum?
Yes, it does. I think if you look at our numbers across the P&L as well as the balance sheet, we've seen double-digit growth on the asset side of the balance sheet across corporate, retail, business banking. We've also seen a 19% growth in total revenues. We've seen double-digit growth on the liability side as well, raising more deposits from the market. And therefore, whichever area in our business that you look at, you see the momentum, you see the growth coming in and operating within what is a fairly dynamic environment. To land the set of numbers that we announced today is something we are quite pleased about.
I like the phrase fairly dynamic operating environment. Credit risk is elevated, interest rate risk is elevated. This is the first set of earnings from Absa, if I recall, barring COVID-19 numbers, where I have seen some color being given around the restructuring of facilities, both on the Timiza book and also on the main book. And my question to you is this an indication that the bank feels that whereas we are chasing this 50-50 split between wholesale and retail, in the present environment, it might need some slow pedaling when it comes to the retail side?
First of all, we are very pleased about this 50-50 balancing the portfolio across wholesale and retail. It's a big win. It's something we've been working on for a number of years. As you may know, you've asked this question before.
Many times.
So we are very happy that we've arrived here. But at the same time, the environment continues to be dynamic. Customers, especially in the unsecured book, experience this environment in different ways. And therefore, there is a need for caution as we continue to grow the asset book. And we'll continue looking at this balance, both from a wholesale and retail perspective. So it's an area to watch, but we are very happy with the balance that we have achieved between wholesale and retail.
So trudging with caution as we move forward.
Indeed.
When we look at the diversification agenda, which really underpins the new strategy, if I could call it, how do you feel? We have asset management, we have the custody business. What do the numbers tell you in terms of the throughput that is being pulled by these new engines?
So a key part of the strategy is, even as we continue ramping up the existing core business of the organization, is to look at the new opportunities, new revenue streams, and bring them on stream as well. And that's an area that we've really focused on. The encouraging thing, as you look at the full year numbers for 2023, is that the new businesses are starting to get into the 15 to 20% contribution levels. So it's a material number. And it's also growing faster than the rest of the bank, which is exactly where we would like to be. Just to give you an example, the insurance product that we deploy on our digital platforms is growing at 48%. Digital loans growing at 40%, compared to the rest of the balance sheet. That is 2x. And therefore, over time, we expect the portfolio to rebalance, and we expect these new businesses to contribute even more while we continue to grow the core bank as well. So exciting times, and at least the early part of this strategic execution does show that it's having the right impact. The actions that we are taking are landing correctly, and quite a number of the indicators are showing us that the momentum is there.
where would your sweet spot be as you talk about you're getting them into the 15 to 20% contribution to the revenue pie?
In the medium term, within this existing strategy, we are looking at the 25 to 30% kind of range. Remember, the rest of the bigger core bank is also growing and is powering on. Whether you look at the wholesale bank, whether you look at business banking, whether you look at what we are doing on the SME front, where we've been lightweight, in the past. So it's powering on, and therefore to get to higher percentages, you have to do a lot more on this front as well.
Even as you talk about increasing your weight on the SME side, when you look at it vis-a-vis the context of the state of the loan book, the way the market is, first of all, maybe just comment on the numbers we have seen as far as your NPL is concerned, and what measures you're taking.
So total NPL is 9.6. It's still below 10%. And it's also way below the industry average, which is in the 15% kind of range. So it's within the industry average and roughly within our appetite. We'd like it to go down over a period of time, but we are happy with where we are, especially when you look at it in the context of double-digit growth in the asset book. On the SME front, it's not just about lending. It's also about providing transactional services. It's about getting into empowerment, training, and helping these businesses grow. And there's a lot of work that we have done in that space as well. Even as we look at the risk and ensuring that we are not taking too much risk in that space. So, for example, one of the elements that we look at is using our corporate ecosystem and the corporate network that we have within Absa customer base to support the SMEs in their growth agenda. So you're deploying working capital, you're deploying lending, but you're deploying it within an ecosystem and supported by data to ensure that what we provide to each customer is really personalized and is data-led and data-based, so reducing the risk in the process. And we are, in fact, seeing a reduction in the risk parameters within our SME portfolio, which is quite good.
Your efficiency numbers, they've traditionally been good, but of course this time it's quite interesting. And just before this, we were having a chat and I was asking you, you are trimming almost to the bone. And we wonder whether you're in an optimal position, whereas you don't want it to be too high. Again, being too low might raise some questions in the industry.
Yes, and I think you have to remember, Julius, that this is a ratio. So at the end of the day, it's a play between the revenue number and the cost number. Yeah. But having said that, it places us in a position where we feel that we have the option to invest more if we need to. And so that's a number even when we gave the outlook and we gave some of the guidance for the medium term. We said low 40s is possible on that number. It gives us that optionality, but it's really based on investing for future revenues. And if you do that, that ratio typically doesn't move too much because any new cost you put in place with a bit of lag brings in the revenues. And therefore, you're always having that number in that range. And, we really would like to remain there rather than go up.
Abdi, listening to you, it looks like you might be having some heavy investment coming down the road. Maybe you could give us some context around that.
I think the areas that we have already stated where there is going to be investment is around technology, digitization. We've done a lot already. Over the last couple of years, we've put in somewhere in the region of 6 billion Kenya shillings into tech investments. When I was speaking this morning, I shared the percentages, 25% increase in customers self-serving online in 2023 alone. I shared the number of transactions, the percentage of transactions that happen away or outside the branch, which is now 98%. So the digital investments are showing some benefit, and we'll continue to invest in the digital agenda, going forward. Additionally, as always, there will be investment in traditional brick and mortar, where there is the opportunity, where there is the client demand for it. We've opened a couple in Nairobi. There is more coming down the road. We're looking at new sites in Eldoret and other places. So that's another area of investment as well. We're also looking at agency banking. We already have somewhere in the region of about 1,000 locations. We're looking to increase that significantly, and over the course of this year, you will see probably a doubling of that number. Again, that comes with investments in marketing, in branding, in technology, and other areas. So there's quite a bit of investment coming down the road, but as always, it is led by where the client is and where the revenue opportunities are, so that at the end of the day, this cost-income ratio number shouldn't move too far from where it is, maybe 1 or 2 percentage points upwards.
So there's a 100 bips margin there we're looking at.
Yeah.
How did loan repricing play out in the F23 numbers? Last year, as you'd remember, was quite an exciting year in terms of the revision of the benchmark rate, and we kept on getting notifications from our banks. So how did it play in these numbers?
It's played to some extent, but the numbers are also driven by fundamental growth in the balance sheet. Gross disbursements into the market, 147 billion, cutting right across corporate, retail, business banking. That underlying growth in the balance sheet of about 18% is the biggest driver of the revenue number. But there was some element of repricing, especially for the variable rate facilities. But there's a big chunk of the book that did not also reprice. So it's a blended outcome that we have received. It's not just a 1+1 for every policy change we reprise. No, we've ensured that as much as possible, some of that impact does not flow through to customers as well. So it's been a balance.
FX was a huge topical issue last year. When you look at your numbers, especially when it comes to the NPL book, my question would be, what proportion is attributable to hard currency debt?
It's a 70-30 kind of split. And, of course, you mentioned the currency. We had quite a year. We worked with a lot of partners and a lot of stakeholders in the market to ensure that, the right measures are put in place. And I mentioned during one of the interviews earlier, some of the work that we did together with the central bank team, led by the governor, a lot of the initiatives that they put in place to improve liquidity, to improve participation within the FX market, that has created the state that we have now, where the market is a lot more liquid. We are seeing a strengthening of the Kenya shilling, and a lot of the challenges that we faced, both in the markets themselves, but also as relates to the facilities, which is the question that you ask, are kind of correcting as the Kenya shilling strengthens, and as we see it finding true value, so to speak. And it's something that we are very, very encouraged about, and we are watching. We're watching to see how that develops. We've had a good 2 months that shows a positive indication.
I certainly hope the 2 months get longer. Final question, Abdi, is I think it's about, is it 11 months or 10?
10 months. I'm in month 11 now. Yes.
Now you're in month 11.
Yes.
How has it been?
It's been great fun. I mean, it's been good to be back. It's been good to work with the team here in Kenya to execute our strategy, to work with our board, the group, and all the stakeholders that we have engaged in this market. Kenya is an amazing place in which to do business. Yes, there are challenges that the economy has gone through, especially in 2023, in line with the regional economy, in line with what was going on in the rest of the world. But when you look at today what's happening in sectors such as agriculture, when you look at what's happening in tourism, when you look at the underlying resilience of the macroeconomy and the GDP growth rates that we are seeing, I meet a lot of the partners and people that Kenya works with through this journey. There's a lot of positive expectation. And to be here, to be with the team as we execute this plan has been an incredible privilege. And I'm really looking forward to executing on our strategy as we move forward.
All right, Abdi Mohamed, thank you so much for your time.
Thank you, Julians. Thank you so much.
Appreciate it.
Great to see you, as always.
Right, and that takes us to the close of our conversation with Abdi Mohamed on Absa's FY23 earnings. This has been largely a strategy and macro-focused conversation. We have a conversation coming up with the CFO delving deeper into the numbers and key ratios. Stay tuned.